as a bank, as a new bank, how has Alika adapted during this whole COVID-19 crisis, and in what areas are you lending and supporting brokers and their clients?
Yeah, it's the number one question we're asked, and I think adapting is interesting. We've all had to adapt, but necessity is the mother of all invention, isn't it? We were fortunate in that modern technology and tools are in our DNA, so our teams really adapted incredibly well. They were focused in on delivering for brokers and serving our customers, and that's across two primary product types at the moment: owner-occupied and commercial investment mortgages. But the bank's, of course, much broader than that. So during lockdown, we launched our first SME savings deposit campaign as well. So we got used to very quickly delivering in the circumstances that we all found ourselves in. Really pleasing for us was the consistent approach that we took with our brokers across owner-occupied and commercial investment mortgages. An example of that is there isn't one sector that we lent in pre-lockdown that we didn't consider during lockdown, and that we wouldn't consider today. So even at the height of lockdown, we faced challenges, of course, like many other lenders. But credit policy and appetite for supporting SMEs, which is where we see the gap, remains stable across all product types. I think it was really a case in point of not panicking. Of course, part of our response was driven by the fact that we've got no vast backbook of loans in terms of servicing, but we also kept a really open mind from a credit risk perspective, and that really meant that we supported where others were forced to review their pipelines. We spoke internally about remaining shoulder to shoulder with brokers and customers. So for us, really, pragmatism has been key, and for us that means there's good businesses to lend to in every market. But you just really need to understand the story. And of course, COVID has meant for all businesses involved in the specialist market, there's been a larger reliance on digital tools, and we've been committed throughout lockdown, back out and back in again, that we make sure that those digital tools are best in class. So whether that's onboarding a new broker firm to our panel remotely, or our introducer portal to make it clearer and more intuitive for brokers to use. We're told by brokers constantly that despite lockdown, fewer hours commuting, no one has more time. So we've been focused in on how we can continue to iterate product and process. And we're really proud. We went out and surveyed our brokers in August and September. And at that time, we were under significant strain in terms of volumes, and we wanted to know what they said, and we wanted to listen to that and react to that. And over 90% of brokers rated our introducer portal as good, very good, or excellent. And that's probably an example of how actually you can use periods of interruption to actually take a good look at your business and plan for the future.
Since June, Alika has seen a 235% surge in commercial mortgage applications. How have you been able to fill this gap in the commercial market?
The surge has been fascinating. From June onwards, basically all bets were off in terms of volume. To put that into some context, yes, 235% surge in applications. I think there's a deeper point there. Of all the applications we received in our first trading year, 75% of them came in the last quarter. So you can see how the business is scaling up. We've looked internally and said, how did we achieve that? What can we learn from that, and how can we plan for the future? I think it goes back to the proposition, as Alika sees it, that we set out, which was to tackle brokers' key pain points. I was in that market for 12, 13 years, so I've had some battle scars that could help inform that. But we spoke to brokers. What is it you need? What is it that isn't in the market when it comes to SME mortgages, when it comes to commercial owner-occupied in particular, and also commercial investment? And they spoke to three key things. They spoke to clarity. There was the feeling in the market that a lot of product sets were unclear. So we wanted to deliver clear commercial mortgage products, clear criteria, clear application journeys, which was the key. They spoke to consistency, bamboozling decisions coming out of credit teams. So we worked hard to drive consistency through credit underwriting processes. And also the collaboration piece, which I think has come more into during COVID. Those face-to-face relationships have clearly suffered, but collaboration doesn't need to. We've shown our unwavering support for the broker market and our BRM's desire to get deals done without undue fuss. So for me, it's been a real focus in on delivery. I think promises over what you can do for a broker partner are gone. It's all delivery, and it's the delivery that will be remembered. Personally, from my perspective, I think those that have delivered for broker partners through this time have built that brand franchise. And if we continue to move forward and we don't rest on our laurels, we continue to invest in our broker portal, we continue to provide status updates automatically to brokers, and we help their day-to-day workload, I think we'll be in a great position. Volumes, of course, also need people. So we've increased staffing levels significantly since June. Quadrupling our underwriting headcount has been key. You can get caught out by volume very quickly, so we've always tried to stay ahead of that. So today, for example, we're in fact performing slightly better than our SLA. So today, a broker can send us a commercial owner-occupied transaction, and we're likely to turn that around in 2 to 3 days. It's also been a real focus in on those heroes in the business, and they're the people that often aren't seen by the market. So we've increased our customer service team by 25%. We've quadrupled our lending support officer team, you know, the real engine rooms of the bank. And it's a credit to all of them that have been able to deal with those volumes. They are heroes. They're working in difficult circumstances, not ideal for many of them to be working from home, but absolutely focused on delivery. And as I say, I think through this period, those that have delivered will be remembered. But of course, can't afford to rest on the laurels. We all need to keep moving forward.
Sure. And following on from that collaboration piece that you mentioned, what advice would you give to brokers who have clients in need of commercial mortgages during these times, just to ensure that cases progress smoothly? And I know you mentioned obviously that your SLAs are between 2 to 3 days, which is fantastic. But how can they kind of make sure that can happen on their side?
I think very often brokers do give us advice about some of the questions we're asking. But you know, for a broker, knowledge is power, and that means knowing your borrower inside out. So I think for me, the big one at the moment is storytelling. We often get really good numbers about a transaction, but at the moment, it's words that really matter. You know, those two things matter equally. We need to know the numbers behind the transactions, and we need to know the words behind the transactions. And also encourage those brokers to build strong, trusted relationships with BD teams that actually understand the role of the broker. I know relationship building is key to the industry, but for me, it's that realization that in the market we're in and the market we're going into, that may need new relationships. That may need relationships with lenders that perhaps previously a broker hasn't considered or doesn't know. You know, it's, you know, if a broker says they've got 100 lenders on the panel, how many of those are active today? I just think there's going to be that refreshing of relationships, building of new relationships, and those will help drive us out to support these borrowers to get what they need.
And you mentioned earlier as well that, you know, you've made a raft of appointments, quadrupling underwriters and your broker support team, among others. How will this help you with your ambitions to lend £100 million over the next quarter?
Yeah, I mean, in essence, our development roadmap for the business for Allica Bank has not changed. And in fact, in certain areas, it's sped up. So the successes we've seen, the support we've received from the market, which we're so grateful for, has enabled us to speed up. We've brought in new talent everywhere, right across teams, extensive industry experience, real deep industry experience. So we continue to attract and onboard best-in-class individuals across all teams. There's just no time to pause. So, yeah, it's more than just customer broker-facing roles. Our ambitious plans need the right people everywhere. A good example of that is probably asset finance, which is a proposition we're launching into the broker channel later this month. We are also looking to further develop out a payment account for SME businesses. Part of our goal to become that full service lender. And it's those people that will drive those numbers. It's attracting those best people in the market. In terms of our broker-facing team, we're currently 8 in the field, and I'd expect that to double over the coming months in order to support the volumes we're seeing. For us, there's some real quality individuals in the market, and we absolutely need them to keep driving the business forward.
You mentioned a bit earlier about your appetite in the commercial market. How are you able to get comfortable and mitigate the challenges in the hospitality sector, such as restaurants and pubs, considering what's happening in the market with national
It's a very timely question, in that our last credit committee case, which was approved earlier on this week, was for a seaside hotel and bar. We know hospitality has been one of the hardest hit sectors. It's a sector I know very, very well from my previous life. I think it's probably really illustrative of the problem here, because it's been hard hit. It's meant that all hospitality businesses have been labelled as ultra high risk, so many lenders won't lend to them. For me, for the bank, it's just not as simple as that. Every business has had its challenges, but every business has its own opportunities as well. Every management team needs to be assessed individually. They've got their own individual talents and experiences. So we have remained comfortable lending to those businesses, and will continue to. We lent through the last lockdown. You might say, fine, that was just a decision. Well, we're doing it now. So we continue to lend to businesses in those sectors, and they're the enterprising business owners in that sector who have used this as a chance to refocus their business and plan for the future. So for me, it's about lenders needing to be able to make common sense decisions. And they need to be tailored for each business, not the sector. From broker days into transitioning into no man's land now at a lender, I don't want to hear a sector's got a traffic light colour to it, whether that's hospitality, industrial, whatever it may be. There's good businesses and there's businesses that are having challenges. It's not the sector, and that's how we do it at Allica Bank.
I mean, that nicely ties in with what you said earlier about how brokers really need to know their customers and know them inside out and know their stories, and lenders should also be acting in the same way. And like you say, not all businesses are high risk in a particular sector. So I think that's a really good point you made there. What is your outlook for the commercial finance landscape in general in terms of competition, offering, supply and demand next year?
We've always said, and we'll continue to say, that the SME segment of the market is heavily underserved and hasn't received the attention it deserves. I think it's getting more of that attention. The micro SME end of the market has received a lot of innovation, the likes of Starling and Tide. But that SME market that sits above that from a long-term committed commercial mortgage perspective has been hideously underserved. There's new entrants coming into the market. And hopefully that will provide more options to SMEs. Our application volume suggests that market is in rude health. But this underserving bit of the SME, another 2 or 3 lenders in that market does not solve for that challenge. The market dislocation that has caused SMEs to be underserved has been accelerated by COVID. And as we work our way out of government support schemes, which have played a vital role in the market, that dislocation for me is going to get more acute. Lenders have withdrawn from the market. That's a reality. If they come back in, how are they going to come back in? I doubt it's going to be at the levels they were at in terms of credit appetite before. So it's likely to be a foot back into the market. And if we show how our brokers feel, we surveyed our brokers in August and September, and 99% of brokers reported seeing declining lender appetite as the largest hindrance to their business and their customers. So as we move in and look at what the landscape might look like next year, there's a couple of bits that are key for me. The first is that clarity of offering. Lenders need to be clear with their broker partners and SMEs and borrowers, what it is they can do and what it is that is outside of appetite. I think the big question mark going into next year is liquidity. So who's actually got the firepower to be able to support these brokers and customers at scale? And then to the scale part, who's got the operational capability, who's got the boots on the ground and the people at their desk that can support these transactions. And it's also about confidence. So, you know, we can talk ourselves into some challenges. What's that overall funder confidence piece? What does that look like? And yeah, I think we should expect that funder confidence has been dented, and that coming back out of this, they're likely to put a toe back into the market rather than go straight back in at previous levels. In summary, I think liquidity is probably the biggest challenge. I think non-bank lenders, you know, are probably looking to see how they can secure capital, and you know, the shakeout from that, the concern is that ultimately that could affect volume of deals done.
Do you see much M&A activity happening in this market as a result of that?
Well, we ourselves, as we've explained to the market, we're out for a major fundraising round at the moment. That process is underway and going very well. I think there's going to be opportunities for Alika and other players, of course, across M&A, but also across forward flow as well. Yeah, this liquidity piece, I don't think has received too much attention in the press. Yeah, we can, as a bank, go out and raise deposits. If you are a non-bank, that liquidity piece is going to be a real challenge, and typically that in of itself, without all the other factors we've discussed, will drive M&A activity.
Interesting. Obviously, Alika is quite new to the market, new bank. What one thing does the industry not know about Alika?
I think in terms of scale and people, so yeah, we're scaling incredibly quickly. We're now 138 employees. 83 of those have started since March 16th, or lockdown number 1. And you know, that for me is probably not recognised by the market. I think very often they see the swan in terms of service delivery, and not necessarily the manic paddling under the water. But as I said, our heroes in the business are doing on a day-to-day basis. And I'd expect, as I said, that number to move forward very, very quickly over the next couple of months.
Wow, that's an astonishing amount. A significant number of people that you've hired since the first lockdown. And I didn't know. I knew you'd hired quite a lot of people, but not in that size. And then just a couple of questions about yourself, Nick. How did you get into the industry, and what would you be doing if you weren't in finance?
I know we're on the record, so I'll be careful with what I might be doing if I wasn't in finance. How did I get into it? I had a fascination around access to finance. So I was at university, and I worked full time during university. I worked in bookmakers, an independent-owned chain of bookmakers in the Midlands. And I met my partner then, who's now my wife, and we were looking for a residential mortgage. So I was a student, full-time income, looking for a residential mortgage, and no one would listen to me. And I remember it still gets me angry now. No one would listen to me. No one would understand my circumstances. And it just got me interested in access to finance and what that means and how that moves economies. I was then fortunate enough to stumble, and it was a stumble, across a graduate trainee commercial mortgage position. And I took it because it said plus bonus, and I had a massive student overdraft. So it wasn't a fully thought out decision. But that role was the best thing that ever happened to me. It taught me about timing, taught me about luck, hard work, making the most of opportunities, which is what we talk to the people in the bank about. I then ran that brokerage as MD for 5 years before I joined Alika 2 years ago, when it was time to cross into no man's land and look to work to affect market change from within a lender. So very fortunate to get into the industry. If I wasn't in finance, what would I be doing? What would I be doing? I'm a massive boxing fan, but on the basis I'm highly unlikely to enjoy getting punched in the face for a living. I think I'd go back to being a bookmaker. I think I would, working in a betting shop. It's the ultimate game of taking calculated decisions. So probably quite a few crossover analogies into lending. But don't tell our chief risk officer that, he might take that the wrong way.